Hello and welcome to TaxPundit.org. TaxPundit is India's most popular and trusted database of income tax case laws. In today's video, we will be analyzing a landmark case study that provides critical insights for tax professionals. Let's dive right into the details. The case under discussion is Sandeep Kapoor Anr versus Deputy Commissioner of Income Tax, pronounced by Delhi Tribunal on the 29th of April 2026. The Income Tax Appellate Tribunal, Delhi, F. Bench, in a consolidated order dated the 29th of April 2026, addressed the tax treatment of on money received over and above the registered sale consideration in real estate transactions. The appeals were filed by Sandeep Kapoor and Amarjeet Singh Kapoor for assessment years 2021-22 and 2023-24, arising from search and seizure actions under Section 132 of the Income Tax Act, 1961. The core dispute centered on whether undisclosed cash receipts should be taxed as unexplained money under Section 69A or as part of the sale consideration for capital gains computation. The tribunal, comprising judicial member Satbir Singh Godra and accountant member Manish Agarwal, delivered a nuanced ruling clarifying the boundary between these two provisions. The assessees, Sandeep Kapoor and Amarjeet Singh Kapoor, were directors of Messrs Kapoor Waters Company Limited. A search under Section 132 was conducted on the 31st of October 2022 on the Johnson Watch and Kapoor Watch Group, covering their residential premises. During the search, loose papers and incriminating material were seized, leading to the reopening of assessments under Section 148 for assessment year 2021-22. Jointly owned by Sandeep Kapoor, 25% share, Amarjeet Singh Kapoor, and Parvinder Singh Taneja. The registered sale deed dated the 9th of April 2021 showed a consideration of Rs 1 crore, but an agreement to sale found during the search revealed a total consideration of Rs 1 crore, 67 lakh. The differential of Rs 67 lakh was treated as on money. Sandeep Kapoor's 25% share, Rs 16 lakh, 75,000, was added under Section 69A by the assessing officer. Sandeep Kapoor's one-third share in on money of Rs 1 crore, 10 lakh, Rs 36 lakh, 66,666, was similarly added under Section 69A. The AO's reasoning was that the cash received over the registered value was not recorded in the books of account and thus constituted unexplained money under Section 69A. The CIT appeals upheld this view for the first property but granted relief for other additions. The tribunal meticulously examined the text of Section 69A, which states, where in any financial year the assessee is found to be the owner of any money, and such money is not recorded in the books of account, and the assessee offers no explanation about the nature and source of acquisition, the money may be deemed to be the income of the assessee. The bench identified three cumulative conditions: ownership, non-recording in books, and unsatisfactory explanation. The pivotal finding was that the AO himself accepted the source of the on money. The tribunal observed, the AO himself has observed that assessee has received this cash from the buyer, thus the source is duly accepted by the AO. The identity of the buyer, Shri Pradeep Nandal for the first property, was disclosed in the sale deed. The tribunal held that once the source is identified and accepted, Section 69A cannot be invoked. The tribunal delved into the commercial reality of the transaction. It noted that the on money was received at the time of sale of a movable property owned by them, and thus partakes the character of sale consideration. This is a crucial distinction. The money was not an independent, unexplained asset but an integral part of the sale proceeds. The tribunal directed that the on money should be added to the sale consideration for computing long-term capital gains. The revenue argued that since the cash was not disclosed in the regular books, it must be treated as unexplained. The tribunal rejected this, holding that the non-recording in books is only one condition. The more critical condition is the failure to explain the source. Since the source was explained, buyer of the property, the deeming provision under Section 69A cannot apply. The tribunal also noted that the AO had not disputed the identity of the buyer or the fact that the payment was for the property. The ruling provides clarity for taxpayers involved in property transactions where part of the consideration is paid in cash. It establishes that on money cannot be automatically taxed under Section 69A if the recipient can demonstrate the source, that is, the buyer's identity and the transaction link. The correct treatment is to include the on money in the sale consideration for capital gains computation. The burden of proof shifts to the revenue to show that the source is unexplained. The ITAT Delhi's decision is a significant precedent for the taxation of undisclosed cash components in property sales. By holding that on money cannot be taxed under Section 69A when the source is identified, the tribunal reinforced the principle that deeming provisions must be strictly construed. The direction to recompute capital gains by including the on money ensures that the income is taxed appropriately, preventing double taxation or misclassification. Question: what is the main legal issue decided in this case? Answer: the ITAT decided whether on money received from the sale of a movable property, which is not recorded in books of account, should be taxed as unexplained money under Section 69A or as part of the sale consideration for capital gains. The tribunal held that when the source, buyer, is identified and the amount is part of the sale transaction, Section 69A cannot apply, and the amount must be included in the sale consideration for computing capital gains. Question: what are the three conditions for Section 69A to apply? Answer: according to the ITAT, Section 69A requires 1. The assessee must be the owner of the money, bullion, jewelry, or other valuable article. 2. The asset must not be recorded in the books of account. And 3. The assessee must offer no explanation or an unsatisfactory explanation about the nature and source of acquisition. All three conditions must be cumulatively satisfied. Question: why did the ITAT reject the revenue's argument that on money is unexplained? Answer: the ITAT rejected the argument because the AO himself accepted that the money was received from the buyer of the property. The source was identified and explained. Since the condition of unsatisfactory explanation was not met, Section 69A could not be invoked. The non-recording in books alone is insufficient to trigger the deeming provision. Question: what is the correct tax treatment for on money in property sales according to this ruling? Answer: the correct treatment is to include the on money as part of the total sale consideration for computing capital gains. The tribunal directed the AO to recompute the long-term capital gains by adding the on money to the registered sale consideration. This ensures the income is taxed under the correct head and at the appropriate rate. Question: does this ruling apply to all cases where cash is received in property transactions? Answer: the ruling applies specifically to cases where the source of the cash is identified and linked to a specific property sale. If the assessee can demonstrate that the cash was received from a known buyer as part of the sale consideration, Section 69A cannot be applied. However, if the source remains unexplained or the identity of the payer is not disclosed, the revenue may still invoke Section 69A. Question: what was the outcome for the assessees in this case? Answer: the appeals were partly allowed. The ITAT deleted the additions made under Section 69A for the on money and directed the AO to recompute the capital gains by including the on money in the sale consideration. Other grounds of appeal, including the validity of approval under Section 148B, were dismissed due to lack of effective submissions. Thanks for watching this video. You can download the full legal analysis, the official case law, and a concise case digest PDF directly from our website, taxpundit.org. If you have any questions, feel free to write to us at taxpundit@taxpundit.org, or message us on WhatsApp at 9326306668. Don't forget to subscribe to our channel for more authoritative legal updates.